Good morning. Welcome to our third day of Cybers. Third day already. Time is flying. But at the same time, let me tell you, as far as we're concerned, it looks like we've been here for a week, as these first 2 days of Cybers have been so much busy. Welcome to the 9th Corporate Forum of Swift. My name is Alain Haas. I'm Chief Executive at Swift of EMEA, Europe, Middle East, and Africa, in Asia Pacific, and I have really the pleasure to making the introductory remarks to this forum. So, as you all know, there's been a lot of talks during the last 2 days. Asia is moving. Clearly, the fact that we have so many attendees at Cybers this year, we are passing the bar of 8,200 delegates being registered, is showing that the shift west to east is really happening. And I'm not going to bother you too much with numbers, but there's been a certain number of discussion over the last 2 days about how much is this happening. And it's clear also there's been some consensus that perhaps, yes, the growth of Asia is slightly slowing down. But at the same time, I'd like to remind you just one key figure that I've heard that some of you may have attended the opening plenary Monday afternoon with Piyush Gupta, who was talking about his vision of Asia. And what he said that day, Monday afternoon, was to me completely astonishing. He said, yes, indeed, China, for instance, is slowing down. The economy's growth is slowing down. But at the same time, China keeps adding every 4 years an economy of the size of the German economy. So that is what is happening in Asia and tells you actually the size of the shift. And as you all know, when it comes to economy, size matter. Just to tell you, when it comes to the corporate world, things are happening as well. And actually, the corporate world is just mirroring what is happening in the global economy. Just to give you a certain number here, but you can see on the slide. But looking at the Fortune 500 list, 34 of these global companies are now coming out of Asia. And looking at the top 10 global companies in the world, no surprise to see that 4 of them are also coming from Asia, 3 actually from China and 1 from Japan. And there is actually a single week nowadays where there is in the press news about an acquisition of a European and American company by an Asian company. When it comes to what is happening really in Asia, and if we examine only Asia corporates, we see from this slide that the Fortune 50 list released in July this year that 48% of the Asia top companies by sales and market value are now from China, 20% are coming from India, and 18% from the ASEAN part of this region. Compared to last 10 years, actually this is quite a shift because most of those 50 companies at a time were actually coming either from Australia or from Japan. So clearly, the shift is happening. We at Swift have been actually in this business already for nearly 15 years, as you may remember. And clearly, when it comes to what we do in Asia, we clearly have decided to accelerate this. And let me tell you a bit more about why. But first, tell you also the importance that you're putting in this. Actually, it could be perhaps to you quite a surprise that actually the chief executive of Europe is actually located in Asia. That tells you also how we see things moving to this part of the world. But when it comes actually the reasons why we want to be part of that, we want to support this business. First, talking for corporates. Clearly, we live in an era of unprecedented change and innovation, as you've seen, where reliable market infrastructures play an increasingly important role to corporate treasurers. Digitalization is rapidly taking over and seen as a threat to the more traditional banking methods. Recent industry surveys, as I'm sure you've seen, indicate that corporate treasurers in Asia are increasingly turning to technology vendors for a single consolidated view of their liquidity and increasingly building up an integrated platform with not only cash management tools, but also effective interbank communication system. When it comes to banks, there has been a seismic shift for banks to need to understand corporate trending towards being bank agnostic, as you all know. Corporates are better informed than ever to optimize their internal available resource and be less dependent on external source of funding to better manage their liquidity and banking relationship. Corporates are eager to take the finance functions to the next level by adding value and increasing efficiencies in their organization, taking strategic decisions on how and where to deploy cash, which is the typical mainstay of the bank's previous relationship with the treasury functions. As market uncertainty continues, the need for visibility, control, alternative cash and liquidity options will only intensify. Thus, we believe that a robust bank with an ability to understand key aspects of its client's business, such as overall payments activities and data, can be more proactive in helping their clients better manage their costs and process efficiencies. Banks should also put heavy focus on enhancing their products and services whilst working with technology providers, such as many companies you see here at Swift, here at Cybos, and also with us. So when it comes to the role and objective that we believe our company has into this, actually it's pretty simple. What we're looking at is trying to foster in this whole shifting environment a global harmonization. And we see this as around a certain number of mainstreams, streams like standards adoptions, like a single and secure network platform, like integration of internal platforms and cash management tools into communication device as well. So clearly, harmonization is a key role that we want to play. The other one is around cost efficiency. Clearly, the focus on cost remains paramount, and this is also a place where a company like us wants to bring its support and help, and we can do that around different streams. Like again, flows, operation efficiencies by implementing better workflow control, cost savings that will bring cost savings for both banks in managing many of their global corporate clients' demands, etc., etc. So clearly, this is an aspect that we can play. So today, we'll hear today and tomorrow, by the way, and we see ourselves as a facilitator. We know gathering all together many banks, many corporates. As a matter of fact, I'd like to highlight that for this corporate forum, which is the 9th, as I mentioned, we have 180. The last count that are here, 180 delegates coming from the corporate world. And of course, many others coming from the banking industry. And the role that we see here is really to facilitating this exchange, bringing in front of you the right panels, the right speaker, and trying to foster the communication, debate, and coming up with the ideas that will be helping actually the relationship between banks and corporates moving forward. So we've put together, as you can see on that slide, what we believe to be a comprehensive agenda. I hope this is going to be very much valuable to you. I'm not going to go through this list of topics and all that. I'm sure that you have plenty of time during these 2 days to looking at this and participating to as many sessions as possible. Just a few words about looking forward and certainly a bit more about our commitment. You know that we've been, as I said, in supporting the relationship between bank and corporates for now 15 years. The commitment moving forward, as you can see here, is clearly there. Actually, we believe we can do more, and we can do more with banks and with corporates, really maintaining and supporting this relationship. So clearly, we believe we can address more challenges as this world keeps developing, as the technology that is now involved into this relationship is also changing every day and being better and more efficient every day as well. You've heard a lot about blockchain technology and many other aspects of the change that is happening into the technology world. It's clearly something that we can help in this as well. So in our new strategy, we keep investing. 2020 clearly shows a focus on to supporting this industry, and we want to keep clearly investing into this and adding even more innovative capabilities, especially when it comes to connecting. And I'd like to say, I keep saying to my guys in Asia, please make sure we connect the dots, and that's what we want to do. So bringing innovative solutions to increasing this capillarity of our network. So in conclusions, Swift industry role and its relationship with both banks and corporations have evolved, clearly, since Swift for corporates was first introduced. Actually, I thought it was in 2000, but it was in 1999. The next 5 years are likely to see comparable, if not greater changes, with Swift increasingly becoming the focus and driver of initiatives that enhance security, efficiency, and integrity of financial transactions for our community. We believe that corporates clearly can play a key role in defining and prioritizing these initiatives by engaging with Swift, with the banks who own us as well, in our industry working group. I'd like to wish you an excellent corporate forum. You have another 2 days of Swift as well, so I'd like to wish you also an excellent next 2 days until the end of Cybos. And that's also now give me the pleasure to introduce our keynote speakers. So I'd like now to introduce Shimura-san, Senior Managing Director at SMBC. Shimura-san is no stranger to Singapore. You may know him in ASEAN as well, because he's been here, actually based here, I think in Singapore, for 11 years. He now oversees the transaction business divisions, which support transactions, banking, business operations of diverse business units at SMBC, and also offers products and services such as cash management, settlement, foreign exchange, and supply chain finance to meet global needs. He's also responsible for executing the innovation strategy of SMBC Group to appropriately respond to the new technology and innovation in financial services, such as the fintech, by implementing the method of design thinking or applying the concept of open innovation. Please join me in welcoming Shimura-san. Thank you very much.
Thank you very much, Mr. Rice, and good morning, everybody. Welcome to Corporate Forum of Cybos. My name is Shimura from SMBC. I'd like to start of my opening speech from a viewpoint of Japanese banks and talking about the transaction banking and Asia. As Mr. Rice introduced, I lived in Singapore for totally 11 years, and I feel a part of myself is still with Singapore. At first, I'd like to start with one of the short story I found during the last 5 years. Last 5 years, from 2010, I was in Singapore, and several times a year, I had a chance to go back to my home country, Japan. And I was surprised to find a nearby bookstore from my home, their shelves displaying more foreign language textbook, and moving these textbooks for foreign languages, they are shifting to the front of a bookstore where people notice the most. Do you know what that means? Actually, there is a major trend in learning foreign languages in Japan. On the other hand, the number of the foreigners visiting Japan has been quite significantly increasing for the last few years. Around 5 or 4 years ago, just 7 or 8 million foreign visitors visited Japan. But 2 years ago, this figure go beyond 10 million, and last year, foreign visitors to Japan, which reached 13.5 million. And this year, maybe this figure will go up to furthermore to 90 million. This is quite significant for Japan. This is a drastic change for Japanese society. When I visit one of the major Uniqlo store in Tokyo, together with my family, for example, when I went back to Tokyo from Singapore, store is filled with visitors from overseas, and Japanese customers, like my family, they are having a difficult time shopping. We see more signage written in English, Chinese, or Korean at the train station and along the street in Tokyo or Osaka. It has become common to see bilingual sales staff not only at the department stores in Ginza, but also even at the drugstores located in the outskirts of Tokyo. As you may know, Olympic will be held in Tokyo 5 years later, 2020. I'm sure that this foreign language trend may be further accelerated in the future in Japan. You may think it is quite minor change. However, this particular change seems to be a very much revolutionary for me. Once Japanese people tend to become passionate about certain things, they all tend to focus their energy and move forward into the same direction with as much as 130 million people. In 5 or 10 years in the future, I'm picturing the realization of the society where most Japanese people are capable of speaking English with friends in Asia without any difficulties, just like people in Singapore. I'm sure that it may not be too far in the future for Japanese people to become Asian citizens in a real sense. As in all interaction, communication skill is the most basic business skill that is required for business. What is most important in communication is trying to understand other people's situation, circumstances, or their view. It is not what you would like to convey, but rather what the other person is asking us. The business will not be successful unless you are able to communicate from his or her perspective. Needless to say, it works the same way for transaction banking business. I'd like to speak today mainly on 3 issues from a Japanese bank's perspective, with the said viewpoint regarding the Asia and transaction banking. At first, I'd like to speak on diversity in Asia. Asia is made up of the many countries at different economic development phase. Varying demographic trend and diverse background and history as to ethnicity, culture, and religion. Thoroughly understanding the unique characteristics of respective Asian countries is the first step that we can take for doing business in Asia. This is why I consistently visit and observe the front operation and directly listen to clients' opinion as much as I could when I was here for the last 5 years, and when I conduct our business in Asia, I try to make it a rule to visit very much frequently to have a direct talk with the people in local society in each countries. For instance, leading to the opening of SMBC's Yangon branch, we opened Yangon branch last March this year, together with Mitsubishi and OCBC, a Singaporean bank, in last March. I visited Myanmar before that. Before opening the branch, I visited Myanmar from Singapore for more than 30 times. Many of these were to engage not only clients, but also senior officials of the government or central banks to explain how bank like SMBC can contribute to the progress of their financial sector. Let me ask you this. What is your typical image of a Japanese bank? I suppose most of you may think that Japanese banks' business model are mainly depending on loan or assets. This used to be a quite inherent business model for many many Asian banks. Lately, many banks introducing Japanese banks have shifted their strategy to be less dependent on assets. Furthermore, you may think that the Japanese banks only deal with Japanese corporations. This is no longer the case. Japanese banks have diversified their client base, comprising Japanese corporations, Asian companies, and Western multinational corporations. As a result, transaction banking to need to take into account the changing banking needs as companies evolve. For example, in the late 90s, one of my first assignments when I came here around 20 years ago, or when I was late 30s, I came here for the first time. At that time, one of my assignments is to develop quite a basic cash management system platform to support our clients, mainly or only Japanese. Requirement is quite simple, and the service we offer was also quite simple. Since then, platform has evolved to introduce treasury management system and supply chain finance. Our customer base has been expanding to include local company or multinational corporation. Bank will be required to develop solutions that meet the evolving needs of our clients, take into consideration the diverse laws, regulation, and practice, quite unique in Asia. Let me give you some example. Some of you may think it is unusual. However, the number of the clients in China who prefer to use Japanese banks' cross-border pooling service is increasing quite lately. We have always heard that there have been solid and substantial client needs for optimizing liquidity control in overseas countries, but the extent and the scope is restricted by local regulation. I believe that thoroughly understanding the local regulation and having the frequent communication with local financial authority, which worked favorably. This would be one of the reasons why many companies operating in China prefer to select our cross-border pooling services. The cash management buying behavior of corporates are broadly divided into three major categories: global, regional, and in-country. US multinational corporations tend to buy on a global basis. As for such corporation, it is becoming to be difficult to certainly manage its operation, as more countries need to be covered and there will be more regulation to comply with. These multinational corporations have moved toward buying a regulational basis. On the other hand, Japanese corporations used to have a tendency to buy at the local currency level. However, there are many overseas M&A executed by Japanese corporations with the highest level of the surplus fund in our history. One of the reasons why they try to expand with M&A overseas would be maybe one of the reasons would be a stagnation of Japan economy. There seems to be a tendency to deploy regional cash management solution, including acquired local companies. The actual M&A transaction executed in overseas market by Japanese corporation this year from January to August is already the highest, historically high level. Singapore has been consistently and proactively working to attract foreign companies to set up regional headquarters in Singapore. More than 100 Japanese corporations have locally established their regional headquarters here, and there are also substantial number of Japanese corporations considering to establish their RHQ, regional headquarters, or to enhance their management function. One of the reasons is the establishment of ASEAN Economic Community, probably. Perhaps There might be some participants here today who are with U.S. multinational corporation and the experience of the actually transferring their headquarters from Tokyo to Singapore. Lastly, I'd like to speak on commitment to Asia. What is most important for conducting business in Asian market would be, I believe, the commitment to Asia. Please let me quote one of the very famous words of the great president of the United States. We should follow the word of ask not what Asia can do for us, ask what we can do for Asia. This is what I was said in the beginning. We should think from the perspective of the counterparty. Then we should have the backbone to achieve Asian own growth. In Asian countries, comprehensive business costs are relatively higher compared to the Europe or United States when we include the investigation and the communication with the regulatory agency or regulation, which may affect our businesses. They change very much quickly, suddenly, and it is quite difficult to adjust to such kind of change of the regulation or law or guidance from a local government. Furthermore, I feel that decision-making and management by those who actually experienced and understood Asia would be required. Concurrently with the ongoing Asia's drastic reform, as I explained in the beginning, the reform in Japan has also begun. I would be happy if participants could leverage this CYBOS conference to connect and discuss what we can do for Asia. Thank you very much for your attention. Thank you.
Thank you. Arigato. So it's a pleasure to have the duty to thank Alain and Shimura-san. So merci Alain, Shimura-san, arigato gozaimasu. And to welcome our first panel to the stage. The topic here is the future of corporate banking, and specifically, what do corporate clients expect from banks? So appropriately, Alain mentioned that there are over 180 corporates here, but I suspect there are probably also a lot of bankers in the room at the moment. So being mindful of that, to help you understand what corporates might expect from you if you're a banker, we've put together another CYBOS first. Apparently there are quite a few firsts at this CYBOS. This is the first time there has been an all-corporate panel at CYBOS, so it's appropriate that the corporate forum is kicking off with an all-corporate panel, and we have an extremely distinguished corporate panel, actually. If I start on your right, Peter Wong has a long experience in corporate treasury, especially in the insurance sector, and is the founding chairman of the IACCT, which is the International Association of CFOs and Corporate Treasurers in China, which is actually in Hong Kong. But Peter's got fantastic guanxi in China and brings a lot of experience. So representing Hong Kong, so to speak, we've tried to bring in different aspects of Asia. We've got Peter Wong, welcome. Next to him, Damien Glendinning is the global treasurer of Lenovo, which is currently the largest computer company in the world, right? Or
PC company.
PC company in the world, and a substantial phone maker as well. Damien's got lots of and long experience in treasury. I've known him for an embarrassingly long time, so we won't go into the details of that. I've known all these gentlemen for a long time, actually. But and Damien is also two-time president of the ACTS, which is the Association of Corporate Treasurers in Singapore, so the local association here. So it's a pleasure to have Damien with us as well. And next to him, Mohammed Derwish is the treasurer of Telekom Malaysia, and also the president of MACT, which is the Malaysian Association of Corporate Treasurers. So you see, we've got different industries, we've got different geographies, and we've really got a super panel to cover this topic for you today. And in case you want to know who I am, I'm currently doing treasury consulting. I previously was the group treasurer of Nokia and then Huawei. And actually, I've also been a president of the ACTS as well. So to kick us off, rather than just us talking at you, hopefully you have some little devices, which I do not have one. And we're going to start off with a poll. Thank you. Thanks, Stella. Now, normally when we do these polls at Sibos, you just have to pick one. But because there are multiple possible options, we wanted to give you the choices. So I suggest the easiest way to do this is you pick, with the number keys along here, as many as you think are important, and then press the green button. Okay? So I suggest you use the number keys, type whichever numbers here you feel are important, then use the green button to send your votes into the polling system. So what we're asking you here are, what are the priorities, in your opinion, what are the priorities for corporate treasury in 2016? That obviously will impact what corporates expect from banks. The first one was expand the number of banking partners. Second is to secure financing. The third is to improve working capital and supply chain financing. The fourth is capital management, weighted average cost of capital, trapped cash, and issues like that. The fifth would be bank regulation. Sixth is FX volatility and adjusting hedging strategies. The seventh is implementing treasury management systems. Eighth is KYC and anti-money laundering. And if you think other things are priorities, then hit 9 amongst your selection. So please go ahead and vote or put in your answers. Here we go. 10 seconds. Five more seconds. All right. Okay, so working capital and supply chain financing are the most important here, priority, and TMS, which is not a surprise, and securing funding. If I ask Peter, from your perspective, does that surprise you? And what do you think about those results? Are they realistic?
I'm not surprised, but I would think the FX hedging strategy would be somewhat on the priority of a lot of companies, given the volatility of the currency, spearhead by the potential increase in the US dollar rate. But I think if I may quote, moving into 2016, I think treasurers are facing a lot of headwinds in terms of the ability for them to actually grow their business, given the slow demand in Europe and also the reduced GDP growth in China. So I think the need to release cash by whatever means is important. And I think also important is now we talk about all the financial regulations, which has increased the cost of banks in doing business. And banks increasingly have to do a lot of things to stay profitable. And as a result, they need to segment the customers. And therefore, trying to do a supply chain finance to help maintain the continuity of the supply chain is very important. And it's something which I think is an alternative way for banks to intermediate their role in providing the liquidity.
Mm. Damien, obviously you have a supply chain running in Lenovo, otherwise we wouldn't have our laptops. Does this agree with what you would have expected, or?
I definitely agree that it's what's going on in the industry at the moment. There is clearly a huge focus on working capital management solutions, and we're no exception, particularly as I'm having some interesting internal discussions at the moment because I think we have more than we need. But actually, I think there's several, for me as I look at this, there's several interesting maybe contradictions or things that don't totally follow logically. Because, of course, one of the things that's really funny is that right now we have an all-time low in terms of funding cost. So this is the one period in history when, in theory, your working capital cost you virtually nothing. And certainly I think one of the things that we're seeing is that obviously we've had a mispricing of assets which has come out of all of the quantitative easing, far too much easy cash. And I also think that has probably led to the situation where corporates maybe have not focused as much as they should on the key disciplines of blocking and tackling and making sure you keep working capital under control. So I think in one sense it's logical. In another sense, it's probably a little bit a source of concern because, as Peter said, when do you really focus on managing working capital? It's when you're not very confident about the future. And I think that's probably a sign. But if I can come back to some of the other things. One question is, for the people in the audience today, obviously thank you for coming, but how many are bankers and how many are corporates? Because I suspect we have a high number of bankers, so that's why I find the first question very interesting. Because obviously the bankers are all trying to get us to expand the number of banking partners, whereas most corporates are trying very hard to go in the other direction. And I would say one question that's not on there that wouldn't have been on my list until Monday morning was bankers' fees. And the reason is simply this is a wonderful conference, and I'm really impressed, but I'm also wondering how much it costs. Because I know who's paying for it.
I'm not so sure about bankers. Bankers want us to have bigger, wider, deeper relationships with them to justify their use of balance sheet as well. So
the
incumbents want more.
That's absolutely right. The incumbents want to close out everybody else, but the people who aren't incumbents, of course, are always trying to convince us of the benefits of multi-banking. Yeah. But that's just the way life goes.
Okay, and Mohammed, what do you think about this? How does this strike you?
It looks okay in terms of top three there. Of course, secure funding is a traditional role for banks to provide to give certainty and control to corporates in terms of their growth and expansion. I'm sure about that. Probably it is not the top number there because of the access to liquidity, probably a very abundance with low rates. But surprisingly, they are also given more emphasis on capital management. Of course, working capital is also there. So it shows that corporate treasurers today are going towards more strategic roles in managing their operations. So because the processing roles probably have been elevated further with the advancements of technologies and treasury systems. So treasurers would have more time looking at capital management. I think that is right there because looking at more visibility of cash within the organization, probably looking into in-house banking for themselves. Of course, they will look at how to improve their balance sheet in terms of as far as targeting a much better ROE with the Treasury's involvement. So it's right there. I mean, capital management is very key and it's getting a more importance for treasurers to play a role. So I suppose there's a focus today, I think, for most treasurers.
Yeah, great. Actually, yesterday I had the pleasure of attending a presentation about a Boston Consulting Group survey on what corporates want from banks. And one of the things that came up was the broadening of the corporate treasurer's mandate that has been going on successively since Lehman, basically. And working capital fits in perfectly to that. I'd just like to ask, though, if anyone who hit others wants to share what they were thinking of. Anyone Any hands up? There's one here. Can we have a microphone there? Damien? Can you introduce yourself and say who you are, who you work for?
Hi, I'm Damien. I'm working for UBS. I cover Swiss corporates in Asia. And the one thing that they bring up is price, constantly. Price of the services.
But as a corporate treasury priority, does that mean reducing costs is a priority?
Yes.
And are bank fees the key component of treasury total costs? Well, I'll ask my panelists here.
Probably
since you're a banker.
Well, I think I know you and I are at the same point on this. One of the frustrations with the cost of banking services is that usually there isn't a whole lot of transparency.
No.
So really the main issue you have as a corporate treasurer is you really don't know what you're paying, and you know that what you see is only a portion of what's really being paid. And that is, in my mind, that's one of the big issues in this industry.
Well, let's see quickly. I don't have a proper poll for this, so I'm going to have to do it by show of hands. If you are a banker and your banker supports Twist EBSB, which means Bank Services Billing in XML format, could you please stick up your hand? One? Yeah, one. Okay, maybe it's not that easy to figure out what they're charging us. So maybe we should have put that on here. Great. Thank you. I want to pick up on a couple of things that came up in the past 2 days. We're already halfway through Cybos after all. One of them was Piyush's, in my opinion, excellent opening at the plenary. And he talked about transforming customer experience and cited online KYC being done by a Chinese online bank called WeBank that I have to admit I have never heard of before. Maybe Damien knows them. Maybe Damien provides kit to them even. And I'm a bit of a closet geek, so I've been hanging out at InnoTribe. And at InnoTribe, they're all talking about moving from enabling transactions, which they consider to be the history or maybe even current state of banking, to enabling commerce. And I suspect they're probably thinking about Amazon and maybe Alibaba type commerce. And when you look at the stuff represented here, corporate commerce can become quite complex. So there's this movement to the lovely app world of everything being super convenient and working really nicely that we see definitely in the consumer space. And Piyush was saying when DBS manages to get consumers to download their app rather than going through the web, they have something like, I don't remember the numbers, 3 or 4 times more interaction than from mobile users than from web users. But on the other hand, I read just a couple of days ago, Jeffrey Immelt, who's the CEO of GE, said, industry has yet to feel the benefit of the internet in the way consumers have. And so at Cybos, we see a lot of stuff, certainly at InnoTribe and elsewhere, about customer experience and how banks are focusing on customer experience. But what I'd like to ask our treasurers here, perhaps just randomly starting in the middle, is, are corporates getting, are we getting that sort of internet upgrade?
What I like about David is that he only asks questions where he knows the answer in advance. I think it's, for me, the banking industry is a fascinating industry. It's one of the very few industries where, as a private consumer with my very modest amount of funds available, I get far better service than I do as the treasurer of a Fortune 500 company. If you think about it, it is absolutely amazing. But when you take a look at it, the internet banking tools, the online banking tools that you have available to you as a consumer are far better than the ones that are available to a corporate. They're far more advanced, they're far more user-friendly, and in many cases, by the way, they're often far more secure. So for me, there's an absolute challenge here, and there's an absolute contradiction. The contradiction, by the way, is very simple. Of course, why is the user experience so much better as a consumer? It's because it's been in banks' interest to do it. Banks, of course, in the past used to have these vast things called branch networks with hundreds of thousands of employees, and clearly it was in the bank's interest to invest in alternative systems so they could reduce the cost base. From the bank's point of view, the cost of servicing corporate wholesale clients is much more cost effective because you don't need a huge branch network, and obviously the ratio between the number of employees and the value of the transactions is far more favorable. Therefore, there has been far less investment in really advanced systems. Also, to tell you the truth, the other side is that and this is one David and I don't agree on much, but one thing we do agree on is that part of the problem here is corporate treasurers ourselves. We tend to be an extremely conservative bunch, and therefore we tend to resist change and tend to kind of go round the houses 10 times before we will agree to anything. So we're clearly part of the problem. But the net result is that if you actually look at it from the point of view of a corporate, as a corporate treasurer, when you try to implement new banking systems or new systems that go through using the technology which is there, it tends to be very difficult. And just to give you an example, we had a fascinating situation no later than last week when we transferred an electronic banking system from one bank to another. We transferred it to a bank with whom we have a deep relationship, and the first set of payments all failed. Why did they all fail? Well, it's because they'd forgotten to set up the appropriate limit in the appropriate clearinghouse. Human error, these things happen. But it's in this day and age, it is kind of very strange. Now, I do have to admit it was an emerging market where cash management practices are very backward. It was the United States. If it had been in a more modern country, I hope that wouldn't have happened. But at the end of the day, you still get... It is actually surprisingly difficult, and it is 2015.
So, Mohammed,
Yeah.
you're the telco, right?
Yeah.
So you're delivering that customer experience
That's right.
as Telecom Malaysia. Do you think the banks are giving you as good an experience as you're giving your customers?
I think on that score, the B2C space, we see tremendous improvement there.
Yeah.
In terms of, because of the mobile smartphones and the high-speed internet connectivity is more prevalent today. So on the consumer space, definitely banks have provided much better service. But on the corporate space, it is getting traction, but not as probably as advanced as the consumer space. I think corporate themselves are also conservative and value relationship much more than probably consumers. So definitely they would trust whatever services given by the banks and probably felt that more secure going through bank services. So mostly in emerging markets, definitely the trust and relationship to the banks are much more important.
Oh, well, that's echoes what Piyush said 2 days ago.
Okay.
Banks still have trust, which I was thinking as he said it. Yeah, maybe in this part of the world, but I wonder elsewhere. Peter, what do you think about corporate treasury technology? Obviously, now you're more intimately involved in that.
Well, technology has always been an enabler of change, but I hear a lot of people saying that the banking world has been different since the financial crisis. But I think there are two principles which I always told myself, that in order to be successful in banking, first you need to stay profitable. Of course, this may contradict with what Damien said about how to manage the fees. But I think that means because bank is a highly leveraged business, even a 3%, 4% leverage ratio is still very highly leveraged, dealing with a lot of risk. And certain times of the days or the years when you have hiccups, you pay a fortune to clean up the mess. And that crippled the ability for the banks to actually invest in people's future and technology. But another contrasting principle is that in order to be a successful banker, you need to stay close to the customers. And how do you do that? And technology, again, is an enabler because, as Damien mentioned, if you have a retail bank account, you can push the button and move money from Australia to Hong Kong within seconds. But you don't need to do a transfer between, say, Hong Kong to Korea. You need a daily overdraft facility, and that may take you about 1.5 hours. So I think that's kind of, there's a lot of dots and T's to be connected. And I think one of the opportunities here, because I don't think there's any infrastructure in the world like SWIFT, which has over 40 years of history connecting all the banking system together. So one of the observations I have with clients is people are moving from what they call an asset-intensive model to an asset-light model. A bank is particularly like real estate. Banking is particularly intensive business model. So how do you do that when you want to stay profitable and you want to stay close to the customer? It really has to leverage the network, like the cyborgs here, to really collaborate and to look at technology solution which can help. I have a meeting with a corporate treasurer a few weeks ago, and he said, I have a TMS, I have a very good banking partner, but I have a very good ERP, but they don't talk with each other. So, so how can we make sure all the cousins and sisters and they actually can connect it? So a lot of things that I think we understand that we do love our regulators, but now I think bankers are getting closer to regulators to customers. That is unfortunate. So I think that with all that as a backdrop, I think there's a lot of things we can do as a group to actually leverage what we have already built up, and to there are a lot of technology providers, a lot of what I call private equity funds backing them up to finance those investments, which banks cannot afford to actually invest today. But banks have to invest in 2-3 things. They need to invest in people, they need to invest in technology, and they need to invest in the future. That's why I think there's not. I think spending money and time to deal with regulators is not an excuse. It's really something that has to be accountable for and move on.
Great. We've also been hearing at Tribe and elsewhere. In fact, I think it was Piyush who said that it's not about disruption anymore, it's about transformation, which implies, I think in what he was saying was disruption means you kick out the incumbents and new people take over, and transformation means the incumbents self-disrupt. So continuing the theme of from consumer to corporate, the kinds of things that are happening as disruptions or transformations in the payment space along the lines of blockchain and Apple Pays and wallets and so on. Do you see that impacting the corporate space anytime soon? Mohammed?
Not yet at the moment in consumer space, as I mentioned. Yeah. So because corporates would, value, highly value relationship and security and trust. I think that's as mentioned.
So corporates want good old correspondent banking because we know
that's
it works
to be
most of the time.
Yeah, most of the time
in developed markets. Yeah.
And of course, the local banks are getting more. Trust insofar as for having the incumbency and dominance in their respective markets for larger geographies. I think the situation is still there for corporates, for banks.
Okay, that's where the banks, by and large, function reasonably well in your country. What about I suppose, Damien, I'm going to talk to you now more as a representing a Chinese company, perhaps, than Singapore, where obviously banks do work.
Policy banks work in China, they just work for different things. So, Mohammed, I would agree with you, but I'm going to be deliberately provocative, just for a change. But I agree with Mohammed, and clearly one of the problems is that, as I think we all agree, we as corporate treasurers tend to be conservative, and we view being conservative as a virtue because, after all, we do have to, we are custodian of the company's funds, and we have to make sure they get used properly. But sometimes that can go too far, and personally, I think there is a real danger. And I'm sort of picking it up as I sort of listen to some of the inner tribe stuff as well. I think there is a real danger that the real disruption won't come from banks changing, it will come from other people providing a lot of the services that banks provide today. Now, clearly, there's a big leap of faith for corporates to go over from dealing with trusted banking partners. We trust that we know when we send a file to a bank, there will be 5 things go wrong, but in the end, it'll get processed. And in the end, it will get processed. But at the end of the day, as I've said, a lot of the times, this process is very user-unfriendly. As Peter said, you've got monolithic, massive systems all talking to each other, or not talking to each other, as the case may be, and it makes it very difficult to change things. In addition, you have the regulations. And by the way, we talk about the different initials, KYC, AML. For me, the biggest single problem in regulations these days is CYA. Because I understand, I actually sympathize with the bankers because you're dealing with regulations which aren't even clear. So what's the tendency? The tendency is to kind of go overboard and make sure you're covered against everything. Now, customer experience in all of that, sorry, that doesn't matter anymore. And that is a real problem. So what we're seeing in China, obviously China is a country with a highly regulated banking system. And in my view, it's one where it's instructive to look at it because the question is, you can look at the Chinese banking system. I'm not saying it's there and I'm not saying it's happened, but you can look at it and clearly ask yourself the question, has the regulation reached the point where it's so difficult to work with the system that people start using alternatives? And as we all know, there is a big internet company, Alibaba, which has Alipay. They run money market funds. They're beginning to lend money. In the end of the day, they're reaching the point where they basically are doing a lot of the things that the banking system is not allowed to do.
And actually, back to the initial poll, the supply chain finance, Alibaba's moving quite fast into that.
And the real issue is, as you make the regulation more and more severe, as it puts more and more constraints and more cost, because of course there's a cost to complying with all of this regulation. And as I keep saying, I really hate paying all of these banking fines. But every time some regulator somewhere slaps a bank with a fine, who pays for it? We do. Yeah. So at the end, as this carries on, you're going to reach the point where there is a potential that the banking system is going to become so rigid and so expensive because of all of these constraints that you might reach the point where even us highly conservative corporate treasurers might say, well, let's go with these other guys, it's so much easier. And the areas where this can happen, FX, certainly one of the big topics right now is liquidity disappearing from a lot of markets as a result of regulation. Who's stepping in to provide the liquidity? Hedge funds and other people. That's a pretty fundamental change, and I'd be pretty concerned about it. When you get to payment systems, you've got people like Alipay, you've got people like PayPal who have an infrastructure which is quite capable of handling volume payments and which is probably going to be much better at interfacing to your ERP system. Because, one of my frustrations today is we make all of these payments electronically, but the process by which we get the information relating to the detailed payments into our ERP systems to match the accounts receivable is frankly still somewhat tortuous and complex. So I think there is, I'm not saying it's going to happen immediately, but I think there is a real possibility that we could find disruption coming from people other than banks providing what have been traditional banking services.
Yeah, okay, but it's not here yet.
No.
I just want to zoom in on one particular area that Damien has mentioned, regulation and so on, quite a lot. And one of the things that came up from the Boston Consulting survey very, very strongly several times was KYC. And the unbelievable, I mean, every treasurer I talk to, I can tell you very, very strongly from hard survey data, anecdotal data, any other kind of data you want, that one thing treasurers want from their banks is rational, streamlined, preferably online KYC processes. Peter, I mean, can you echo that from a Hong Kong perspective, or?
Yes, I remember having a client open a bank account. It takes more than 3 months.
Yeah.
I think we are always...
Whereas WeBank apparently does it in 5 minutes or 3 minutes or something. Yeah.
I think we have to understand that we want to be a good corporate citizen.
Yeah.
We want to safeguard where the money should stay within the good part of the society and not the bad part of the society. But I think we also recognize that the internal process of banks have not been geared to those kind of process. And therefore, how we can actually internally streamline those process to ensure the customer is not being jeopardized is very important. I think there's not something, I think, for example, when we try to confirm whether our payment is successfully sent to the other counterparty, now I think there is a product from SWIFT which can actually filter your pay informations. So I think in a way that when you set up your bank account or your vendor files or payment relationship, if you do some good preparation work or some what I call registration process, then you can actually achieve a much efficient process. Yeah.
So, and actually, SWIFT has a product. I'd like to see, can any banker address this for our corporates here? Why is this so difficult? I mean, it's basically, you need the same things, documents about the company's mem and arts and that sort of stuff.
We're all providing the same documents umpteen times to different banks and often to different branches of the same bank.
Different departments, anyway. But so, can any banker explain to me why this is so difficult and why we can't all get onto SWIFT's new KYC platform and simplify it? Anyone want to take a go at that? We got one here. Can we have a mic, please? Microphone here.
Thank you. My name is Sunil. I work with Barclays, and we are one of the, I think, the early adopters to what we call SWIFT KYC registry.
Yeah.
Now, I think once we've got approximately 500 banks, if I'm not mistaken, and it'll go up to 1,200. If you want to use a common platform, right, you have got to have faith. And I think SWIFT is that platform. And you also need scale. You need enough people on that platform to be able to make it worth paying that
network
fine.
Effect.
Absolutely.
Yeah.
Sorry. A couple of things. One, the regulators don't speak to each other, right? So from a banking perspective, what we need from a corporate, say in the US, might be very different from what you need in Africa. To give an example, the UBOs, ultimate beneficial owners. In some countries, it's 10%. In some countries, 5%. In some countries, they need the passports and trade licenses of the ultimate beneficial owner all the way to the top, right? So the regulators need to speak to each other. So till the time there is, I guess, a level of consistency, it's not going to happen. The different branches are going to ask you for different stuff. But again, if I may challenge the corporates here from a banking perspective.
Go for it.
Yeah. See, there is the entire banking industry works on the basis of faith, and I think as an industry body, and it could be in telecom, it could be in construction, etc., there needs to be some effort put by the corporates in terms of bringing faith into the banking system. So, for example, an initiative which says, listen, we've got as an industry these guidelines which will make sure that every member of that independent body complies to certain ABC regulations, and therefore, any bank that deals with them can be assured of ABC. Right? So it's very easy to start putting the blames on banks.
So you think corporates should self-KYC?
Absolutely.
There's an idea.
I couldn't agree more. I think that's a wonderful idea. Sadly, I just don't think it's going to happen. So
but you're the president of the ACTS.
Yes. Well, you're the past president of the ACTS.
All right.
No, it is an absolutely good point, and all joking aside. But the reality is, and I clearly accept that us corporate treasurers are part of the problem. I mean, one of the issues is that, as we've said, we tend to be very conservative. Also, we tend to be much better at complaining than we are about actually making things change. And frankly, what we tend to do is we just tend to call in the banks and shout at the banks and say, now you go fix, which is not particularly constructive. But I think at the end of the day, to be realistic, you also have to recognize that just as there's some banks which are eminently trustworthy, there are some which are a lot less so. The same applies to corporates. So clearly, when I look at our membership, there are some people where I would happily place full faith, others where you might need to be a little bit more careful. So I think we do have to recognize that that there is a problem here. But I think if we step back, I completely agree with you that one of the issues is that we have all the regulators trying to outdo each other and they can't agree on what is required. So I think it first of all starts off with a lack of consistency among regulators. Then at the end of the day, I think we're never going to reach the point where we get 100% everybody in agreement. So all the various bodies need to get together and agree on what makes sense. And I think if you take a look at KYC, we have the situation, as you rightly pointed out, the regulators don't agree. Among them, among different regulators, the banks don't agree because they all have different standards. And given the multi-billion-dollar fines flying around, I fully understand that the banks are anxious to protect themselves to the maximum. And then at the end of the day, yes, we corporates are part of the problem, and certainly one thing we should be doing. But again, it's very difficult to get corporates to act in unison on this, is I think we actually need to start saying to banks, listen, we're going to provide this once to a central depository. You go get it from there because I'm not going to give it to you. I agree we should.
Some are doing that, right, including you. Okay, we're really running short of time, so I need to move on to the second poll, please. We have another poll, same deal. Multiple choice, type in as many. And this is about multi-bank services, obviously a little bit germane to being at a SWIFT event. Which multi-bank services do you think are most important for corporates? Balance reporting and payment initiation, i.e. MT940, MT103 and that sort of stuff. Standardized common message formats, ISO and CGI, remittance information and reconciliation, REMT message, trade and supply chain, MT 798 and BPO, TSU, derivative confirmation, MT 300 series, bank account management and KYC, and bank services billing that I asked about before, and others. So please go ahead and vote on that. It's the basic balance reporting and then remittance information and reconciliation, number 2. Well, that's encouraging. Any comments on that?
Yeah.
Maybe I can switch it round, actually, because there was another issue that we did want to cover, and we're running out of time. You mentioned, from your perspective, the importance of local banks in terms of reach within different geographies and funding ability also.
And certainly they are also dominant in the domestic payment clearing systems. So reliance on domestic banks is always there. So as well, they are also getting improvement in terms of cash management and global connectivity as well.
So I guess if you're like Telecom Malaysia, you have millions of consumers that you need to collect monthly telecom fees from,
definitely.
and you just need local banks for that kind of business.
Sure.
Which has implications for this topic here, because then if you're going to have multiple local banks because you can't do everything with one global bank, then you need a multi-bank.
Because corporates are also working towards centralizing their treasury operation. Definitely having these tools provided to you definitely is much better. Even though they are domestic operations, they will certainly need cash visibility at all times and remittance and reconciliation update efficiently as well.
And Peter, global bank or local bank?
I have been recently busy working with some major state-owned enterprise companies in China because of the initiatives of One Belt, One Road, and also the government's desire to internationalize RMB. I've seen more and more this company trying to develop themselves as a future Fortune 500 company. One of the challenges of them is to find the banking partners. But given what we have just mentioned about the regulatory costs, all the balance sheet constraints and so forth, we don't see banks jumping on the bandwagon to become a really global bank. In fact, there's some signs that some of that may be a cutback. On the other hand, we see some real strong regional banks, at least in this part of the world, and some Chinese banks also good as well. So I think it's going more important to how to structure a multi-bank model to try to fulfill the needs of companies which has the desire to globalize. Like the company you mentioned, you worked with before, the Chinese company, they have offices in over 100 countries, and they need to collect cash. They need to have visibility of cash position from different banks in the region. So I think that's important, is to try to address that issue.
So most of us want multi-banking services, and we want our banks to work together to deliver services to us. And we are very much running out of time. I'm sorry, it's been so much stuff to discuss. But are there any questions? We could probably take one question from the floor if anyone has one. Just stick your hand up. We have a question here. If we could bring the mic. This gentleman here. Could you say who you are and who you work for?
Yeah, my name is Fabio. I work for a research organization. And you said that likely that the disruption for banks will come from the outside. And taking in consideration all the new digital technologies like analytics, blockchain, algorithmic, what about corporations disrupting banking by means of using asset exchange, for instance?
Very possible. So again, if you take a look, some of the internet companies, so if you look at China, there's Alibaba with all of their different things. There's obviously PayPal, but you take a look, you have things like Google Wallet and so on. So these are corporates who are basically beginning to provide some fairly fundamental payment services. Now, the next question is, I think was your question that are we going to get corporates agreeing to deal directly with each other, maybe via a portal? The answer is, yeah, why not? And today, a reason why not is simply that as we keep pointing out, as everybody keeps pointing out, there is a level of trust in the banking system. But as you reach the point where these things become more and more common, and they'll probably start off in the consumer space, but as they become more and more common, they will be more accepted. And let's face it, a lot of the time when you're dealing with other corporates, you're dealing with entities who are better rated than some of the banks. So are we there yet? No, but is it possible? Absolutely.
Well, in regulatory situations, we've been forced to do it. In China, we did entrusted loans directly corporate to corporate because the banking market was too Now it's not, but I mean, 10 years ago we were doing that.
Yeah,
So
and
there's precedent for it.
And I think we all already do it, often just to reduce transaction costs and to reduce some of the friction and the risk in the system. It's not unusual for corporates to net payments to each other, which is already going in that direction, right? Mm-hmm. So is it possible? Absolutely.
I'm sure you have lots of other questions, but I have been told to stick to time because this is a well-organized conference, and indeed it is. And I'm really sorry we ran out of time now, but before I let you go for your next entertainment, I would like to invite you all to the corporate and supply chain cocktail. Yes, it's up there. So, corporate and supply chain cocktail on level 5 upstairs here at 5:30 this evening. So I hope to see you all later on this evening, and thank you very much for your participation. And thank you to our panelists. Sorry.